Other data as well. India's goods trade deficit in August has shot up to $24.16 billion, up 17% from $20.67 billion in the month of July. This is because, remember, goods imports have risen 11% over July, but exports have risen by only 6.9%. Latha, tell us more about it and how to read into these numbers.
Well, actually, it's a pedestrian set of numbers. I'll just point out to two areas of worry. One is that this goods trade deficit itself is at some kind of a 10-month high. 24 billion, the last time we had over 24 billion, that was 26 billion, was October of 2022. Economists would like it to be a number 20 billion or less. So 24 is a bit of a worry if every month we go on with that kind of a run rate. Now, exports are up, but it's only 6.9% higher than July, whereas, if you compare year on year, it is only 1% higher. This is also because prices of many commodities, especially India's big export petroleum products, specialty petroleum products, those prices have gone down. But nevertheless, that's a spot of bother. Imports are up 11% in comparison. While that is a negative in terms of current trade deficit, the positive over there is that look at the areas that are showing growth. Very noticeable growth in iron and steel, chemicals, machinery and gold for imports. Okay, what you have on your the screen is exports. It's very good that exports of electronics, engineering goods, cotton yarn are good because they are highly employment intensive. However, we've got this negative from petro products, and that's largely because prices fell. Gems and jewelry is extremely volatile. Let's look at the import data, which is high, and it is creating a current account trade deficit. Chemicals, iron and steel, machinery, all of them show that the Indian industry is ticking well. It's growing, it's hungry for imports, and therefore this should indicate positive growth vibes, just as the direct taxes indicated. Let's come to services data. Again, exports have come in at $26 billion. Now, I would think that this is a spot of bother because it's slightly less than month ago and year ago numbers. Now, it's not just that it is down 1 billion or 2 billion. It is just that a lot of people expected India's services exports to simply take off and go from strength to strength because people are moving GCCs, global captive centers and middle office here. So that it is stagnating at 26 billion could be a spot of bother. But let's see. It's been stagnating at that figure for the last 5-6 months. But goods come, services trade deficit is at 12.5 billion thereabouts. That's what it has been for a few months. But it is a little higher than the last 10-month average. The last time we had such a big deficit, it was in October. So again, you would want to watch the deficit numbers a bit. It's not a great deal. Everyone is expecting it would be, the entire current account deficit will be 1.4% of GDP. Maybe it will rise to 1.5 or 1.6, but that's not a bother.
All right. Thanks so much, Latha, for putting all that into perspective. Some important macro data to keep a watch out for. But with that, we'll slip into a short breather on Business Lunch. But up next, Tata Steel signs a deal with the